A very warm welcome to you. It's my pleasure to welcome you to this week's edition of the program. Now, don't forget to remain your source for all the latest happenings in the world of insurance. Given everything that has happened, there is no doubt that 2020 will go down in history as a year of roller coaster. But we are alive, and that is the most important. Welcome to the show. My name is Lucy Olugbe. On the lineup this week, first we join Faith and our guest, Mr. Fatai Kayode Lawal, the Managing Director and Chief Executive of Sterling Assurance Nigeria Limited, on the CEO Rendezvous, where they discussed the topic, End SARS Protest Aftermath, Insurers in the Eye of the Storm. Speaking during the course of the interview, Mr. Lawal said that by the very nature and structure of insurance business, insurance companies are in a position to conveniently meet their share of the losses in the wake of the wanton destructions across some states. To take a listen.
The insurance company, as they are presently constituted, even forgetting about the recapitalization and the structure and nature of insurance business, they are in a position to be able to meet their share of these losses conveniently, because in a number of cases they have reinsurance, in other cases they have also done co-insurance, and in some cases they've done FAC insurance. So at the end of the day, insurance is a business where the risk is spread thinly across a large spectrum. In fact, beyond the shore of Nigeria.
On this edition also, we will bring you a rerun of highlights from the annual lecture of the Chartered Institute of Bankers of Nigeria, CIBN, where they examine the theme of banks and bankers, finance and the challenge of economic development in Nigeria. Guest speaker was Professor Kingsley Moghalu, former Deputy Governor of the Central Bank of Nigeria. Delivering his lecture, Professor Moghalu said that people with great ideas to transform the economy are often labeled as grammarians. To take a listen.
When they say this man they blow grammar, I say, you're now telling me you are the problem with this country. Because every country that makes progress, you have a lot of people blowing grammar. That is the truth. That is the truth.
Plus, of course, all the other extras we bring you each week on the program. So sit back, relax, and enjoy the time. Details in just a moment. Please stay with us.
Do you know if a child, a spouse, a parent, or a sibling depends on you and your income, you need life insurance?
A very warm welcome to you. It's a pleasure to have you join us on the CEO Rendezvous this week. A lot has happened in the space of 3 weeks in our nation's history. And today on the Rendezvous, we'll be looking at the End SARS Protest Aftermath, Insurers in the Eye of the Storm. To do justice to our topic of discourse is no other than Mr. Fatai Kayode Lawal, popularly called FK for short, who is the Managing Director, Chief Executive of Sterling Assurance Nigeria Co. Limited, and he's also a past President and Chairman of Council of the Chartered Insurance Institute of Nigeria, CIBN. Together, we'll be looking at the topic of choice today. Thank you so much, very much, sir, for joining us on the CEO Rendezvous this week.
It's nice having me.
Thank you. Okay, sir, it's often before now, it's been said that insurance is the bedrock of modern society. For a lot of people, myself inclusive, it didn't really make much sense. But given what has happened in Nigeria in the last 3-4 weeks, a lot of people are beginning to read true meaning to when people say insurance is the bedrock of modern society. I just want your take on that.
Thank you very much. Insurance become more popular in time of crisis. When somebody suddenly loses his car, or one parent died. Unfortunate, unforeseen circumstances happen that is not pleasurable to people. Then people try to look for way out. And I think what has happened in our country in recent time is a typical example. The massive destruction following the End SARS protests, or the awakening insurance consciousness in the minds of many. This we have taken a long time to explain to people that when you have an asset, you just have to pay a little more to protect that asset. You never value that asset until you lose it. And unfortunately, what has happened is pathetic, and our heart as insurance professionals goes to the large number of people that have been affected by these riots. Quite a lot of people have lost their source of livelihood. Quite a lot of people are injured and they are in hospital, and wish them speedy recovery for those in the hospital. Pray that God grant the souls of the departed eternal rest and comfort the families around them. For businesses, yes, you can replace businesses. I mean, a shop that was boggled, if it's insured, can get compensated and the man can continue in business.
Okay, sir. Good thing you said that, because since the events had started unfolding, a lot of people, those that have my number, they've been calling me, so Madam Insurance, now what is going to happen? My shop, or I lost this, I lost that. But I don't know, as I've told some, I've tried to educate about what is going on, that in insurance, the standard insurance, there are exclusions, there are exemptions. I do know that war, for instance, is not covered in insurance. So, but for civil commotion, for riots, as we have seen in different parts of the country, for those that are insured, can they go and sleep because they are covered or because they are policy holders?
The standard policy usually exclude riot, strike, and civil commotions. But most times, insurers allow prospective insured to buy this exclusion back into the policy by paying additional premium. So, in other words, most of the standard policies we have will largely have had these exclusions paid for, except in very rare situations. But notwithstanding, in circumstances like this, insurers are part of society. And I believe they will be there to show empathy, and they will look at those claims. For those who are insured, it's unfortunate if you have 10 of those shops, it's not likely you get more than 3 or 4 that are insured, and you have 7 that are not insured. So those who are insured should go to their insurer and provide information about their loss. The second major problem in this part of the world is poor record keeping. With technology, with advancement in technology, people should be able to keep proper record of what they have in their warehouse, their purchases, their sales. So if for instance, you have a record at the end of the month that you have 10 plasma in your shop, and during the month you bought additional 10 to make 20, and you've been able to sell 4 out of it, everybody will know that what you have left in your store at the time of the riot and strike will be 16. And that makes for easy claim assessments. But in most cases, you don't have those records. But notwithstanding, I need to just reassure members of the public that insurance companies will be willing to look at their claims for those who are insured, and in respect of losses that are within the terms of the policy. For instance, if you have only a fire policy and your shop has been burgled, your insurance is not covering the burglary. And that's why I said people who have policies should approach their insurance company or their broker or agent to present their case. And I think I'm confident that the insurance companies in Nigeria today are strong enough and able to meet all these losses.
Okay, so now speaking about meeting the losses, it's been estimated that the protest and the aftermath cost to the economy is about 700 billion as we'll speak. That's the figure or statistic that's coming from the LCCI. Then the Lagos state government on its own has said they will need about 1 trillion naira to salvage some of the things that have been destroyed. But I just want to ask you, what does this colossal loss portend for the Nigerian insurance industry, given the fact that the industry is also currently wrapping up their recapitalization exercise, so to speak?
These figures that are coming out is not unexpected, but we really need to ascertain them. But notwithstanding, the insurance company as they are presently constituted, even forgetting about the recapitalization and the structure and nature of insurance business, they are in a position to be able to meet their share of these losses conveniently. Because in a number of cases, they have reinsurance. In other cases, they have also done co-insurance. And in some cases, they've done FAC insurance. So at the end of the day, insurance is a business where the risk is spread thinly across a large spectrum. In fact, beyond the shore of Nigeria, I know quite a number of insurance companies outside Nigeria that are already worried and are calling to ask questions about the extent of these losses and what it will impact on their own balance sheet. It's obviously going to affect the balance sheet of quite a number of insurance companies that are largely involved in some of this risk. And globally, it's also going to impact on the world reinsurance losses in general.
Okay, sir, do you see, how would you say that this will play out? Because as I said, we are getting this large volume of claims coming at the time when the recapitalization exercise is supposed to be winding up by December, given the extension that we had before. So for you as a player in the industry, what does this really portend? Should, not forgetting the fact that it's also a year that businesses are also just coming out from the COVID-19 pandemic and all of that. Would you say the recapitalization exercise will truly or should truly round up or be concluded by December this year?
To me, the capitalization is actually different from the claims. Whether there is capitalization or no capitalization, the insurance companies that have taken some of this risk have taken them on the basis of their current capital. And if they are adequately protected and properly structured, they should be able to meet these losses. The capitalization will only help to add fund, make fund easily available to them to be able to pay these losses in good time. And I know that the commissioner is already reviewing this situation with his team, and we should allow them to come up with their own position rather than operators preempting what they would want to do. But I just try to correct this impression that the capitalization is not ending this year, it's ending September next year.
Okay, sir. I do know for us in Nigeria, the insurance industry, they've not had large-scale claims at the same time like you find in other climes when you have hurricanes or earthquake or significant events like that, as we have witnessed now. Going forward or in this crisis, how easy do you think policyholders will be able to, you just mentioned that record keeping is a challenge on the part of policyholders. So how easy do you think it is for information gathering or information giving for policyholders, and also collecting information and damages of losses from the insuring public as on the part of insurance to make sure that the claims process is seamless and not too cumbersome, given the fact that the trust level, especially when it comes to claims settlements in this market, is still a major challenge?
Yeah, just like I said, both sides need to understand that for you to be able to make a claim, insurance is intended to return you to a situation you are before the loss. And that's what we call indemnity. I mean, if you suffer a loss, insurance company wants to ensure that you are compensated up to the extent of your loss. You don't make a profit from your loss. And that is why this record keeping that I mentioned earlier is very important. Just like some has mentioned, quite a number of loss adjusters are already on the field checking some of these losses. And just as the public don't seem to trust the insurance companies there are quite a large number of the public that want to use opportunity like this to defraud insurance companies.
Okay, so it's a follow-up question I was actually going to ask you. How can the insurance industry also forestall people taking advantage of what has happened and manipulating the system when it comes to fraudulent claims?
The easiest way to do it is to be on the field immediately after the loss, which quite a lot of us are doing. Going to the field to check the extent of damage and engaging reliable, responsible, and trustworthy adjusters to review those losses.
Why do you say reliable?
I have to put those words, and they were carefully chosen. Because you are asking somebody to be independent and to be your eye in the middle of this storm. You need to get people who can genuinely do that and do it well. Do it compassionately on the part of the insured who has suffered loss, because at this point the insured are not willing to listen to stories. You just need to let them see exactly what you are. Insurance is a pool, and you want to ensure that people who get compensated from the pool are those who genuinely suffer losses. The insurance companies are largely custodian, and it's only in this part of the world, because of increasing competition, where losses happen, prices goes up. So this is the first time we're having major catastrophic loss, which is equivalent to what we call earthquake or hurricane in all those Western world, where many people suffer losses at the same time. But once the losses are settled, you'll be in a position to ensure that more and more people get into the comfort of insurance. And this is what the insurance industry is supposed to benefit from this EndSARS riot loss. This issue of trust is mutual, and I think we've gone past those stages where we start arguing over small lines. No. Insurance companies today will want to look at the big picture, and they want to look at the insured and want to ensure that the insured is put in a position that they were before the loss.
All right, welcome back. Moving on, we now bring you highlights of the CIBN annual lecture. While many believe that the banking sector is doing their best to contribute to economic development, they can still do more to support SMEs and promote financial inclusion. Happy viewing.
The annual lecture of the Chartered Institute of Bankers of Nigeria, CIBN, is a public lecture that focuses on topical issues in the economy. The annual lecture attracts chieftains of the banking and finance industry, public officials, foreign diplomats, the academia, and top executives of the organized private sector. With the theme, Of Banks and Bankers, Finance and the Challenge of Economic Development in Nigeria, was recently held at the Jewelry Hall of the Bankers House, Victoria Island. Keynote speaker was Professor Kingsley Moghalu, former Deputy Governor of the Central Bank of Nigeria. As expected, stakeholders in the banking and finance and the organized private sector turned out in their numbers. Welcoming guests to the lecture, the President and Chairman of Council of CIBN, Dr. Uche Olowu, said that creating a better banking system requires a good vision, strong ethical and moral values.
Creating a better banking system will require good vision, firm determination, and strong ethical and moral values. Our task, therefore, is to free ourselves from prisons of wrong values, especially greed and avarice. Today's lecture on banks and bankers, finance and the challenge of economic development in Nigeria is particularly apt in relation to emerging trends, and I trust it will provide further insight and value to this great gathering.
In his brief remarks, The chairman of the occasion, Mr. Yari Abba Buka, chairman, Nigerian Economic Summit Group, said that the extreme percentage of Nigerians that are poor should be of concern to every citizen.
Extreme poverty percentage of Nigeria is extremely high. It should be of concern to each and every citizen. If you can do something about it, please do it. Whether you're a policymaker, a business person growing your business, or whatever. It's something that relates to a lot of other adage that people use. One being a South American priest who said, the poor are awake because they are hungry, and the rich are awake because the poor are awake. So it's an area of concern. The other thing is 3 to 3.5%. That's the population growth rate of Nigeria. Now, GDP growth, however, is around 2%. Now, that means that every day or every year, if we continue to grow at that GDP rate, we will be poorer. Even when we used to have that exciting growth rate of 7% or so for about 10 or 15 years, it wasn't inclusive because our misery index, which is a combination of the unemployed and underemployed, was on the high side.
Delivering the theme of the annual lecture of banks and bankers, finance and the challenge of economic development in Nigeria, Professor Moghalu, OON, said that without the necessary structural reforms in the Nigerian economy, the central bank will not be able to address the root problems.
The first is that without the necessary structural reforms in the Nigerian economy, billions of central bank intervention in development finance will not do the job. If you don't structurally reform the economy to address the fact that 40% of the price of goods in this country is mostly made up of generator costs, if you don't address the fact that a significant portion of a bank loan repayment that is average of 20 to 25% is because the bank is running 2 generators per branch, 24 hours, and they must pass on the cost of that generator to the borrower. These are structural things that must be reformed.
Expecting nothing less from the keynote speaker, Professor Moghalu's lecture was greeted with a standing ovation. Panelists at the lecture this year were Mr. Chinedu Ekudima, Managing Director, Nova Merchant Bank Limited, Mr. Kunle Oyinloye, MD and CEO, the Infrastructure Bank PLC, Mr. Eileen Cheyenne, Founder and CEO, H. Pearson Associates Limited, Mr. Johnson Chukwu, MD and CEO, Cowrie Assets Management Limited, Dr. Andrew Nevin, Advisory Partner and Chief Economist, PwC Nigeria, and Mr. Ingo Herbert, Consul General, Federal Republic of Germany. Sharing his thoughts during the panel discussions, Dr. Andrew Nevin of PwC stated that if the real estate sector does not work, nothing else will compensate.
Now right now in Europe, interest rates are negative. Our interest rates are over 20%. Why is capital not flowing to Nigeria? Because we have not created an environment where capital wants to come and play a role. And Professor Kingsley talked a bit about the banking sector being underdeveloped at 30% of GDP. In fact, the capital markets are even worse shape. So the ratio between the market cap of the NSE and the economy is about 7%. It needs to be about 80%. People that can't invest in assets in this country, they can't help us develop. So, and the single greatest industry that could drive wealth creation and employment, in our view, PwC's view, is real estate. So 2/3 of the world's assets are real estate. Everyone needs a place to live. Everyone needs a place to do business, even if you're an internet business. And if the real estate market does not work, nothing else can compensate.
In his submission during the panel discussion, Mr. Oyinloye noted that Nigeria is far from transformational growth because nothing has changed structurally since pre-independence.
And that's our time on the program this week. Many thanks for being a part of it. Join us again, same time, same station next week for a fresh package. In the meantime, feel free as always to connect with us on all our social media platforms. Don't forget also to join us live every Wednesday on Nigeria FM 102.7 on our flagship Pidgin English program, Waiting Insurance They Do Serve, powered by NICOM. My name is Lucy Olugbe, and until next time, from the entire team, it's goodbye.